Wall Street slips on Friday. Indices break a 5-week winning streak after a hotter-than-expected producer price index inflation report delays rate cut expectations. Treasury yields too spike to their highest level since December. Stocks in the Asia-Pacific opened largely higher on a weak handover from Wall Street. The GIFT Nifty, however, is indicating a positive open for the Indian market. Crude prices gain as geopolitical concerns overshadow a weak global demand outlook and persistent inflation in the United States. Brent trades above $83 a barrel. And Novartis announces a strategic review of its shareholding in the Indian-listed entity. Sources tell CNBC TV18 Dr. Reddy's is in the race to acquire Novartis AG's stake in Novartis India. DRL says it does not comment on market speculation and that there is no development requiring a disclosure as yet. Paytm discloses to exchanges that 197 Communications has shifted its nodal account to Axis Bank to continue merchant settlements. This even as the RBI has allowed the bank 15 more days before curbs on its banking operations kick in. The RBI also issues an FAQ on Paytm Payments Bank to answer all customer queries on the impact on services. Good morning and welcome to Power Breakfast. I'm Pavitra Parekh. Those are the top headlines that we have for you as we get into a brand new trading week. There's a lot for us to get to and an entire weekend's worth of action. But first up, if you just look at the global markets, the handover from Wall Street was not too good. And on the back of that, you have a lot of the Asian markets which are seeing a little bit of red right now. So what's leading the losses this morning? You have the Nikkei market, so that is down around 134 points. So that one is definitely suffering the biggest cut. But you also have Seng, which is down almost 1%. So that's also seeing quite a big knock right at the start of the trading session. Barring that, it's not too much of a move at all. So the Taiwanese index is just about holding up in the green. There's, just a little bit of green seen over there. Shanghai, Kospi, Straits, all just mildly in the green as well. So pretty mixed open across the board for the Asian markets. The GIFT Nifty will come up for you. We did close above the 22,000 mark on Friday. 2240 is where we closed. And today it looks like the start will be in the open because the GIFT Nifty is implying a 50-point uptick at the start of the trading session. So let's see if that holds or not. But let's also talk about the US markets because like I was mentioning, we did see some red in terms of the action on Friday. So the Dow and the tech-heavy Nasdaq both slid over 100 points. You had the S&P 500, which closed with losses of around 0.5%, like you can see. Now, if you look at it for the entire week, then all three indices broke the 5-week winning streak to end in the negative. So the Dow was down just around 0.1%. You had the S&P 500, which saw a slip of 0.4%. And the biggest cut really came through in the Nasdaq because it tumbled 1.3%. So that is where a bulk of the pain was really concentrated last week. But in terms of the economic data for the US, it was the producer price index that we got, which was a measure of wholesale inflation. This is for the month of January, and that went up by 0.3%. The estimate was of a 0.1% rise. So it was well above what was estimated. Even if you look at the core PPI, which means, the same number excluding food and energy, it increased 0.5%, and the estimate here as well was a rise of 0.1%. All of this really led to a change in the money market. So you saw the Treasury yield spike following the hotter than expected PPI reading. The 10-year went up to 4.3%. It did retreat a tad after that, but it is still pretty much at 4.27, while the 2-year Treasury yield topped 4.7% as well, which is the highest level that we've seen since December of 2023. That is all of the action that we're really tracking from the US markets, both in terms of the market and some, important economic data. But let's listen in to some important opinion. This comes in on the inflation trend in the United States, what it really means for the Fed, rates, and lots more. This comes in from Atlanta's Fed President, Raphael Bostic. Listen in.
Well, I was a little surprised, but not in a big way. Look, I think we've seen a lot of progress in terms of inflation. I am expecting that through the course of 2024, it'll be a little bumpy. I think the trend will continue, but the path all the way to 2%, I don't think we're going to get to that number immediately. So these sorts of numbers, they're kind of okay, and I can live with it. And to me, it just says we just have to be patient and let's not get too far ahead in assuming that the job is done because there's still work to do. My outlook is to start the normalization, start returning our product policies stance to a more neutral stance in the summertime, right? And I'll have to say, a year ago, 6 months ago, I was in the fourth quarter. So we've seen tremendous progress, and I'm hopeful that that continues. If that continues, I'll be willing to pull it forward even further, but I want to see it continue before making that judgment. I was one of the 2 rate cut increases, so I'm still at 2, but if I pull it forward, if the data comes in more positively, I could move to 3 for sure.
Okay, still expect 2, but could move to 3. That is the word from the Atlanta Fed president. But let's also bring you some important opinion. This is from Jefferies' David Zavas on inflation and which way he expects the Fed to move. Listen in.
I think the Fed is very open to reducing rates and taking their foot off the brake if conditions warrant it, either on the growth side or on the inflation side. I think it's really hard to look at one piece of data. I wouldn't get too bogged down with it, or even 2 or 3, to be honest with you. I think you got to keep the long-term vision here. And the long-term vision here is that over the last 18 months, inflation has basically fallen back 600 basis points from the highs, from 9 down to 3, all while growth has continued to surprise and accelerate to the upside. So this is really a supply story. It's always been a supply story. The demand siders just got it wrong. And I think we're going to have some ups and downs. Maybe demand's a little bit stronger than we might have thought at this stage of the cycle, and given how policy may not be as restrictive as people think if they look at the combination of the balance sheet and rates, but I'm not really worried about it. I think we're really heading to a trajectory where I think the Fed can be reactive, and that's the support for risk assets. We don't need rate cuts to get risk assets to go higher. Remember, last year, the Fed hiked rates 100 basis points. Market was expecting 50 bips of cuts at the beginning of the year, and the S&P had a fantastic year. So we don't need it. We just need them to be there if things get messy.
All right, that is an important word coming in. And, since we're talking about the global setup, let's also talk about Europe now, because that was pretty much in contrast to what happened in the US. Quite a good close. So you had the French CAC index, which ended with gains of around 25 points. The German DAX also put on around 70 points at the close. And the FTSE, which was the region's outperformer on Friday, it saw a gain of 1.5%. So looking quite good over there. Even if you look at the Pan-European Stock 600, that was up 0.6% on Friday, and it hit a 2-year high as well. It also jumped 2.5% if you look at it for all of last week. So the European markets definitely had a good week in terms of the action last week. But that's everything that we're looking at globally. Let's talk about how all of these cues really impact us and some of the stocks as well that you should track in today's trading session. We have Hormaz and Mangalam here with the trade setup this morning. Guys, a very good morning to both of you. Hormaz, let me come to you first. For all of the volatility that we saw last week, we ended quite well.
Absolutely, and with the way the markets fell on Monday, which was last Monday, anybody who was expecting the markets to be at 22,000 as of close on Friday was a bit rich as well, but it did. The Nifty is above 22,000, and it was the first time it closed above that mark since January the 16th. So that is a positive. It's a 1-month high for the index. What is also good is the fact that it's been a trend over January and February that we are making highs, but we are not sustaining above them. But last week, barring Monday, from all the 4 trading sessions that we gained starting Tuesday, we made the highs and we sustained around those levels, only 30 to 40 points adrift of those intraday highs. So that is another good bit for the market. The third good bit is support coming in from the banks. We've been highlighting this, that the Nifty bank has been the weaker among the 2 indices, but after Monday's low of 44,633 that it made, the index is up almost 1,700 points from those levels, and it closed above the 46,000 mark as well on a Friday. So that was another weekly gain for the Nifty bank as well. So support coming in from the banks, the index is doing well subsequently as well. The stars of the show, undoubtedly, PSUs continue to do well. The PSE index, the PSU bank index both had weekly gains last week. They were a bit lower on Friday, but still ended the week higher with gains of around 2.5% there as well. But one pocket among the PSUs that is on a completely different planet are the OMCs, the oil marketing companies, HPCL, BPCL, IOC, all 3 of them almost gaining around 20 to 30% this month itself. And BPCL got another vote of confidence from Jefferies on Friday, where it said that it prefers BPCL over its other 2 peers. But while domestically things look good, what can spoil the party though is the weak global handover that has come from Wall Street, where the hotter inflation print, as you highlighted earlier, that sent the stocks lower on Friday, and it snapped a 5-week gaining streak as well, Wall Street, the indices there. And the focus now this week will be on the FOMC minutes on Thursday and the Nvidia earnings that come out later this week as well. And as you said, the GIFT Nifty is indicating a gap up start for the Indian markets as well.
All right, so now key to track is, whether that holds, whether we can build onto those gains as well. But Hormaz, we're coming out of a weekend, so take us through all of the weekend's worth of action in terms of stock moves too.
Developments coming in there as well, and Dr. Reddy's clarified to the exchanges after CNBC TV18's news break, where it reported that it is in the race to acquire the domestic portfolio of Novartis, and it said that it does not want to comment on market speculation, and there is nothing as of yet that warrants a disclosure. Now remember, Novartis had launched a strategic review of its 70% stake that it owns in Novartis India last week, so we'll keep an eye out on those developments. Quest Corp has announced a demerger. It's a three-way demerger where the existing entity will be split into three separate independent entities, and they will be listed as well, so including the listed entities. So the swap ratio, where shareholders of Quest Corp will receive one share each of the two demerged entities for every one share that they hold in the existing one, and the demerger will be completed in the next 12 to 15 months. Balrampur Chini has announced a new business foray where they will be manufacturing polylactic acid, which is used in the production of bioplastic, and they would be investing around 2,000 crore rupees over a 2.5-year period, where 800 crore will be through internal accruals and the rest will come via debt. Paytm, the developments continue there as well. Now they've partnered with Axis Bank for their escrow account, which was earlier with the payments bank that they had, and our RBI has also given them an extension from February 29th to March 15th for the deposit and credit transactions as well. Titagarh Rail Systems, they have won an order for 250 specialized wagons worth over 170 crores from the Ministry of Defence. Bajaj Auto has fixed February 29th as the record date for its share buyback, and Sula Vineyards may see a block deal today where World Invest Asia is planning to offload around 8.5% stake. It's a clean out trade, and their offer price is between 570 to 617 rupees a share. Back to you.
Okay, Hormaz, thanks a lot for filling us in with all of that action. We're going to watch for this entire bunch of stocks in today's trading session. Finally, it's over to Mangalam, who's looking at cues from the futures and options space. Mangalam, like Hormaz was pointing out, it really didn't look like 22,000 would happen last week in the beginning, but it did.
Well, for all its volatility, last 4 days, the Nifty has been actually closing in the green, so that's a positive. Secondly, the day where the markets were most volatile, from Wednesday's low of 21,530 itself, the Nifty rose about 511 odd points itself. And all this at a time when the Nifty Bank was considered an underperformer. All of last week, the Nifty Bank was up 1.6% as against the Nifty, which was up a little around 1%. 5 trading sessions, 3 of them the FIs actually bought in the cash market. And, on Friday as well, both the FIs and the DIs bought in the cash market itself. That's not all. Markets are slowly turning towards the positive side, because 640 crores was the purchase by the FIs and index futures as well. And over the last 4 trading sessions, yes, while they're net short, their net longs are increasing from 35% at the start of the week to close to around 38% on Friday itself. Now that we're at 22,000, a lot of the option action is moved to 22,000 itself. The 22,000 put has a premium of 128 rupees, telling you that around 21,900, 21,850, there could be some support. But on the way up, 21,100 call writers still pretty active. That makes the Nifty's previous high of 22,126 an important one to watch out for. Can we see a fresh high in this week on the markets once again? And if we do we see some profit taking or not? 20-day moving average of 21,703 would be an important support to watch out for. The Nifty Bank, the next level to cross will be the 50-day moving average. Just watch out for a couple of stocks. We have Federal Bank, which is seeing a lot of long positions being added. Nalco, after a big move, has entered F&O ban, and out of ban is Biocon.
All right, Mangalam, thanks a lot for taking us through all of those cues. With that, we are going to get into our first short break on the show. But when we return, like we told you, the RBI has partially modified directions in Paytm Payments Bank in public interest. So we're going to get you all of the details in just a bit.
मैं IT प्रोफेसर.
Hey guys, welcome back. You're still tuned into Power Breakfast. Now, let's just get you the latest on the Paytm Payments Bank case. Paytm has disclosed to exchanges that 197 Communications has shifted its nodal account to Axis Bank to continue merchant settlements. This even as the RBI has allowed the bank 15 more days before curbs on its banking ops do kick in. So Ritu is here with all of the details on this. Ritu.
Well, essentially, Reserve Bank of India has given Paytm Payments Bank 15 more days to stop all of its banking activities in larger public interest to ensure that customers are not inconvenienced. So in a modification of its January 31st instructions, RBI has now clarified that no further deposits or credit transactions or wallet top-ups will be allowed across Paytm Payment Bank's customer accounts, including your FASTags and mobility cards, after the 15th of March, which is the extended deadline compared to February 29th earlier. RBI has also granted a 15-day extension for Paytm Bank to stop all banking services by the 15th of March, which is the new deadline. Withdrawal or utilization of balances across banking accounts of Paytm Payments Bank, Savings Bank, current accounts, prepaid instruments, fast tags, etc., that can continue unrestricted as before. However, RBI has not granted any extension when it comes to the termination of nodal accounts of 197 and Paytm payment services maintained by the Paytm Bank. That has to be done on or before the 29th of Feb. RBI has also directed that withdrawals up to the available balance must be facilitated by Paytm Bank from all accounts and wallets, excluding the ones which have been frozen by law enforcement agencies. But apart from these, RBI, of course, has also come out with a much-awaited 30-odd point FAQ on Paytm Payment Bank to answer any questions or clarifications the public or the users of Paytm Bank accounts or wallets may have about the usage of services after the 15th of March. For more on that, you can go onto our website cnbctv18.com to find any answers to questions you may have.
All right, Ritu, thanks a lot for getting us all of those details. But let's move on to a very important exclusive now. As Novartis launches a strategic review of its India subsidiary, sources tell CNBC TV18 that Dr. Reddy's may look at picking up Novartis AG's stake in its Indian subsidiary. So Vivek is joining us with more on this. Vivek, good morning. What are you picking up?
Well, good morning. You know, what we understand from our sources is that there could be a very interesting deal brewing as far as the entire pharma space in India is concerned. So, you know, what we are picking up from our sources is that Dr. Reddy is leading the race to go ahead and acquire Novartis AG's, you know, a little over 70% stake in Novartis India. We understand that they are interested in acquiring the domestic focus portfolio of Novartis India. And also, you know, we understand that in order to go ahead and acquire the entire stake, there could be a control premium that they would be offering Novartis AG. Also, you know, remember, there are quite a lot of strategic initiatives that Novartis India and Dr. Reddy have undertaken jointly in the past. So, you know, even Nomura has indicated and they've reacted to a news break saying that it makes strategic sense for Dr. Reddy to go ahead and acquire the stake as far as Novartis India is concerned. We reached out to Dr. Reddy and Dr. Reddy told us at this point of time they don't have any comment. They've also gone ahead and written to the exchanges saying that there are no material disclosures as yet that require disclosure to the exchanges. Now, along with that, you know, we had also reached out to Novartis India on Friday, and Novartis India, you know, proactively sent out a circular to the exchanges stating that yes, Novartis AG is looking to go ahead and do a strategic review of their stake in Novartis India. So, you know, what they've also said is that a couple of important points. Number one, Novartis India is an entity that is wholly separate from Novartis Healthcare. So they have a couple of operations. You know, some of them is under the private entity, some of them is under the listed entity. They also responded to us. They've said that no decision has been taken regarding the eventual outcome of the stake sale of Novartis AG in Novartis India. But an interesting deal, and we need to keep an eye out for, you know, the timelines and, you know, what is the eventual valuation at which this particular deal occurs.
All right, very interesting, Vivek. Thanks a lot for bringing us all of those details. This is going to be a big one to watch for in today's trading session. But for now, we need to get into a break. On the other side, we're going to track all of the cues from the commodity markets. There's a lot going on there too. So stay tuned. We'll be back in 2. Hey guys, welcome back to Power Breakfast. Let's talk about the tea space now because like I mentioned, there's a lot of action going on there too. Manisha joins us with an update. Hi Manisha, good morning.
Morning, and thank you for that, Pavitra. Well, we have seen the crude oil prices kind of gain up. We've seen 2 weekly gains come in for this one. It's trading at an 11-week highs from where we are trading at around $83 a barrel. Well, the geopolitical tensions in the Middle East have been supportive, and also the efforts by the OPEC to restrict the oil market in India is yet another thing that is keeping the prices steady. It is all going to be about the FOMC meeting minutes, which are going to be released in this week. Further direction for the markets would come in from that. In the meanwhile, you have seen the metal prices also continue to surge. Silver is now trading at a 4-week highs. We've seen gold prices come back above $2,000 per ounce. Copper prices have rebounded from a 3-month lows as well. The sluggish U.S. retail sales data has led to dollar index coming off its highs, and that has been supportive. And that's the case for many of these metal prices, which have started Asia on a stronger note.
All right, Manisha, thanks a lot for taking us through that update. With that, we're completely out of time on this edition of Power Breakfast. Thanks for tuning in. We have Bazaar Morning Call on the other side.
Powered by